Let's see, Mr. Jerry, Mr. Mike, Suka, Izale, Sunday. So let's go straight to business. I have just 20 or 25 minutes for this class, okay? So let's start with GBP USD. So we're going to start with the monthly chart because the monthly candle just closed. Okay, so we need to look at the candlestick formation on the monthly time frame. Last month's candle. So I think last month was strongly bearish. It was strongly bearish. Okay, it closed below the support. So going by the candlestick formation we have on the monthly charts, GBP USD is bearish. GBP USD is bearish going by the candlestick formation on monthly time frame. Okay, so next is to go down to weekly time frame. So what do we have on the weekly? So you can see what we have on the weekly. This candlestick formation is called armor. This is a bearish armor. This is a bearish armor, and a bearish armor indicates that the sellers or the bears are becoming exhausted and buyers are showing up in the market. So there's a probability for price to go up after the formation of an hammer. Okay, but because the body is bearish, you can't just jump in and execute buy trade. You are advised to wait for the next candle to close bullish before you execute trade. So if you are a swing trader, you would have to wait for this week candle to close. If this week candle closes bullish, that will be a confirmation that the trend has changed from bearish to bullish. Okay, but I'm not a swing trader, I'm a day trader. Okay, so for the week, for those of you who swing trade, you want to wait for this week candle to close before you execute buy trade next week. That is if the candle closes bullish. Okay, so we have AMA here. Now, the same candlestick formation we are expecting to have on weekly. If we go down to daily time frame and we have that set up on daily time frame, we don't have to wait for the weekly candle to close before we decide to buy or sell. Okay, so on the weekly, we are waiting for the next candle, that's next week candle, to close bullish before we buy. What if we go down to daily? So let's assume there is no weekly time frame. Okay, assume there is no weekly time frame. So if we go down to daily and we have AMA and the next candle has closed bullish, we already have a buy setup. So that is what we want to go and confirm on daily time frame. Just assume there is no weekly time frame. Okay, let's just assume it's only the daily time frame we are trading with. So let's go down to daily and see what we have on daily. So you can see what we have on daily. We have what looks the same candlestick formation we are expecting to have on the weekly time frame. We already have it on the daily time frame. So there will be no need for us to wait for the weekly candle to close before we decide to buy. So we already have a buy setup here. This candlestick looks like an hammer, a bearish hammer. Now, after the close of a bearish hammer, what do you wait for? Wait for the next candle to close bullish. And that's what we have on the daily time frame. And if you combine this candle and this together, what you have here is an engulfing pattern. This is an engulfing pattern, which indicates change in trend from bearish to bullish. So based on the daily candle formation, GBP USD is bullish at the moment. It is bullish at the moment. Another thing I want to look out for is I want to confirm if this level was a previous support. If this level was previously a support level, okay? So that will be another confirmation or confluence, okay? So let me increase the size of the, so let's go back and see if this level was a support in the past. You can see it was a support here. It was a support here. So what played out here is likely going to repeat itself. So if I'm going to buy GBP USD, my TP will be this level you can see. So what played out here? Played out here, and is likely going to repeat itself this week. So if I'm buying GBP USD, my TP will be at this level. This will be my first TP, or this first resistance will be my first TP. So what played out here is likely going to repeat itself. In technical analysis, what we trade is price history. We believe that what price has done in the past, there's that probability that it will repeat in the future. That's what technical analysis is all about. Okay. So let's go back and see. You can see also here close to a support. Can you see that? Let's go back and see. I think that is okay. We've confirmed that it was a support in the past. So that is okay. If that level has been tested twice, it's a strong level, strong support level. Okay, so that is it for GBP USD. My bias for GBP USD this week is bullish. So I'm only interested in buying GBP USD. Now, if this support is broken, then you should know that the buy setup has been invalidated. Now, it is also possible that they will just push price down to this level to hunt for stop losses, because a lot of retail traders would have executed buy after the formation of this AMA and also the formation of this bullish candle, this engulfing candle. And where would they set their stop loss? Their stop loss will be at this low and also at this low. So they might want to push price to clear the stops at this level. Okay, so if I'm to buy GBP USD, I'll wait for a resistance. Let's go to 4 hour. You can see on 4 hour, what setup is this? This is an engulfing pattern on 4 hour. So on daily, we have a bullish setup. On 4 hour, we have a bearish setup. Okay, so we want to ensure that 4 hour aligns with the daily time frame. If you want to buy, 4 hour must align with the daily time frame, and that will happen if this resistance is broken. That is when 4 hour time frame will align with the daily time frame. So you might want to wait for price to break this resistance before you consider buying. Personally, I don't think I would wait for price to break this what's it called, resistance, because from the current market price to this resistance is about 57 pips. 57 pips. I don't want to be watching the market or see price move from this point to this point before I would execute. That's like 50 something pips. So let's go down to lower time frame. Let's see what we have on lower time frame. So what we have here looks like AMA, right? Looks like an AMA after a bearish candle. So let's go down to 1 hour. Let's see what we have on 1 hour. Okay. So this is what we have on 1 hour. I might consider taking a buy if this resistance is broken. If 4 hour candle closes above this zone, I will consider buying. So this will be my first entry. If 4 hour candle closes above this zone, I will consider buying. This will be my first entry, and this will be my second entry for GBP. But like I said, it is possible for price to pull back. We have what we call a fair value gap here. So it's possible for price to pull back to this support before it continues with its bullish trend. So it's likely it's going to pull back to this support, or we might want to hunt for stop losses at this level. So that's my take on GBP. I'm looking for buy setup this week. Buy setup. Australian USD positively correlated with GBP USD. So my bias on Australian USD is also bullish. Okay, it's also bullish. Last week candle closed as a doji. You can see for some time now, Australian USD has been in a range. For the past, I think 5-6 weeks, Australian USD has been in a range. So we have a support here, right? This is a support, the low of the range, and this is the high of the range. Price has tested both resistance and support. So a breakout from this resistance, that is, if the 4 hour candle closes above this resistance, you might want to consider buying. And if the 4 hour candle closes below this resistance, you might want to consider selling. But personally, I'm more interested in buying Australian dollar USD this week. I'm not interested in sales. I'm interested in buying Australian dollar USD. So even if a candle closes below this level, since that's not my bias, I would not execute a sell trade. I'm only interested in buying Australian dollar USD this week. Remember, the market is dynamic. Trend can change anytime from bearish to bullish. Okay, so that is it for Australian dollar USD. Let's see what we have on 4 hour. Okay, so you can see what we have on 4 hour. This is the shooting star. Okay, indicating change in trend from bullish to bearish. So we can't just jump in and start buying because we have a shooting star, which contradicts the weekly setup, okay, which is bullish. So if you want to buy, like I said, wait for a candle, 4 hour candle to close above this resistance. It was a resistance at this level, resistance at this level, and also a resistance at this level. So it's a key level. So that level must be broken before you consider buying Australian dollar USD. And if this low is cleared, because there are a lot of stop losses at this level, they now want to push price down to these levels to clear stop losses. Okay. Now that doesn't mean if they break this low, price will continue selling. Okay. Are you following? That this low is taken does not mean price will just keep dropping. You might just hunt for the stop losses. After hunting for the stop losses, and price will just start going up. It's just change direction. Okay, and you know what a lot of retail traders will do when this low is taken and a 4 hour candle closes below this level, they will see that as a valid breakout. And most of them will jump in and start selling and they will get trapped. Okay, so that's my take on Australian dollar USD. I'm looking for buy opportunities this week, irrespective of the fundamental, uh, irrespective of fundamentals, news that will be released this week. I'm focused on buying Australian dollar USD. This week is on NFP week. Non-farm payroll will be released on Friday. So it's going to be a volatile week. So as you trade, ensure that you are conservative. You stop loss on all your trade. Keep saying it. Once you've set your stop loss, you don't need to panic. Before you execute a trade, you've already defined the risk on the trade. So it's either the market go eat your stop loss or eat your take profits. People panic because they leverage. That is why most people panic. You don't have to panic. So that's it for Australian dollar USD. If you don't want to panic while your trade is running, don't over leverage. It's as simple as that. Don't over leverage. Don't over leverage. New Zealand, same buyers. I'm bullish on New Zealand USD. It is positively correlated with Australian dollar USD and GBP USD. So you can see what we have here. This is a spinning bottom. Spinning bottom indicates change in trend. Okay, and we had a fair value gap here, which has been filled. So New Zealand is set. This was a fair value gap, and that gap has been filled. You can see it has been filled, and we now had a spinning bottom. You can see this is a confirmation. It's time to buy New Zealand USD. This is monthly. Monthly close. If you have a what's it called, spinning bottom on the monthly time frame, you know that it's going to be a long buy. Okay, the candlestick formation on higher time frame are more valid than candlestick formations on lower time frame. Maybe you know that. Okay. So we had spinning bottom on the monthly time frame. What do we have on weekly? Do we have an engulfing pattern on the weekly? Okay, so you can see New Zealand USD was in a range on this point. So yeah, this is the low. Okay, it has been in a range, and last week candle broke out from that range. Last week broke out from that range, telling us that we have more buyers than sellers. Okay, so this is a buy setup on New Zealand USD. But if the support is broken, it is possible price will drop to this next support. But at the moment, I think the bulls are in control. They were able to push price above this resistance. Let's go to daily. What do we have on daily? You can see this was the high of the range. See, so last Friday candle closed above that range. So you should expect price to pull back to a fair value gap before you consider buying. Wait for price to pull back to fair value gap. Wait for price to pull back. I think we have one here. Okay. This is a fair value gap. This gap has to be filled. Okay, so you want to wait for price to pull back to this support. Okay, wait for price to pull back to this support. You can see it was a resistance there, which has become a support. Okay, so you now want to wait for price to pull back to this support before you split a buy trade. You don't want to have patience. You don't want to wait for price to drop to this fair value gap. You can execute your buy trade. Okay, but you should know that your stop loss will be at this level. You want to buy from the current market price. This is where your stop loss will be. So the question now is, are you willing to take that risk? If you buy from this point, your stop loss will be at this level. That's 96 pips. If you are risking 96 pips or 97 pips on a trade, how much profit would you want to make from that trade? So this risk is too high. It is too high, okay? So, but if you patiently wait for price to pull back to this fair value gap or this support zone, if you are buying from this level, your risk will be very, you can see, less than 40 pips, which is still okay. 40 pips. You can also set your stop loss 50 pips below this fair value gap, maybe around 15-20 pips. 15-20 pips. You could also apply, what's it called? The Fibonacci tool, okay? To know where price is likely going to pull back to. You can use the Fibonacci tool. This is H4. Okay, so let's get the Fibonacci tool. Take it from this swing low to swing high. So currently, price is at premium level. It's at premium level. And you can't be buying from premium. You should be buying from a discount level. And anything below 50 is discount. So you cannot be buying above 50. Anything above 50 is premium. So you should wait for price to pull back to a discount level. Okay, and you can see this fair value gap is at a discount level. So you should consider buying around this level. Buying at premium is at a higher risk. I hope that is clear. So that's my take on New Zealand USD. Which other pair should we look at? Look at one or two more pairs, then we'll end tonight's session. If there's any pair you want us to look at, please drop it in the comments. Okay, drop it as comments. Let's look at the pair together. Okay, which other pair? Okay, Euro USD. Let's look at Euro USD. It's positively correlated with GBP USD. Someone is asking, how do I calculate stop loss? How do you calculate your stop loss? Your strategy tells you where you should set your stop loss. Your strategy tells you where you should set your stop loss. Unless you don't have a strategy. If you don't have a strategy, that's when you wouldn't know where to set your stop loss. If you have a strategy, you should know where to set your stop loss. GJ and EJ. Okay, Euro Aussie. Okay, let's look at GJ. GJ and EJ. Let's see what we have on the monthly. Okay. So I think what we have here is a bearish setup, considering the fact that I think the market tested this resistance. Can you see it? It tested this resistance, okay? And there was a strong rejection from that resistance. So this tells me there's a high probability for price to drop. Okay, so I'm looking for sell opportunities on GJ. Okay, based on the monthly candles information. Let's go down to weekly. What do we have on the weekly? The weekly also is supporting a bearish move. As you can see, we have several candles information indicating that the bulls have become weaker. Okay, you can see doji, shooting star, spinning top, several candlesticks indicating that the buyers are getting exhausted. Okay, so we want to see price break. You can see, I think they attempted this support last week, but they could not break out from that support. So if this support is broken, then we should expect more bearish move on GBP JPY. Okay, we should expect more bearish move on GBP JPY. So we had a support here last week. After the close of last week candle, we had a support here. So if you want to sell, you want to consider a breakout from, wait for a 4-hour candle or 1-hour candle to close below this support before you consider selling. And if you are selling below this support, your first target will be this, because there are a lot of stop losses at this level. Price must drop to this level. If this support is broken, this will be the next target. Okay, so that's it for. You can't jump in and start selling now, okay? Because of this bullish candlestick we had last week. Let's go down to daily. So you can see on daily, we already have a shooting star on daily, but it's a bullish shooting star. So to confirm that we have lots of sellers in the market, we're supposed to wait for the next candle, which will be Monday candle, to close bearish. If Monday candle closes bearish, that confirms that there are sellers in the market. So that will be the best time to execute sell trade. Okay. But if you don't want to wait for Monday candle to close before you sell, what we have here is a shooting star. So the same formation we are expected to have on the daily, which is the close of a bearish candlestick on Monday for us to consider selling. If we go down to 4-hour, and we already have that set up, so you just assume that you don't have the daily time frame. Okay, assume that the only time frame you are working with is 4-hour. So let's go down to 4-hour to see what we have on 4-hour. So you can see on 4-hour, we had what's it called, a bullish candle. The next candlestick has closed bearish. That's closed bearish, and the last candle closed as what? And this looks like an hammer. Okay, it looks like an hammer. So if you go down to 1 hour, let's say on 1 hour, yeah, so we have a support on 1 hour. So this support should be broken. That should be your first entry. That should be your first entry. We had a support here. We also had a support here. If 4-hour candle closes below this zone, then you should expect more bearish move on GBP/JPY. So your first entry should be below this level, where it's possible for price to pull back to a resistance level. Okay, it's possible for price to pull back to a resistance level. So you could just apply Fibonacci. Okay, this is 1 hour time frame. You can just apply your Fibonacci from this swing high to this swing low. So since you want to sell, right? Since you are considering selling, price is at, is it discount now? Yes, it's at discount, which is below level 50. So it's at discount. If you want to sell, it's best to execute sell at premium level, right? You want to execute sell at premium level. So wait for price to pull back to, let's say 61.8, which was a previous resistance here. That's a confluence, right? 61.8, and we have a resistance here. So you might want to wait for price to pull back into this between 61 and 79.0 before you sell. So when price pulls back into this zone, you want to see a bearish reversal candlestick formation before you sell. You don't just jump in and start selling because price have entered into this zone. Or you want to set, is it sell limit here? Sell limit order, pending order. No, you should wait for price to close, wait for the candlestick formation, okay? Wait for a bearish reversal candlestick formation at this zone. That is when you would execute a sell trade, okay? So that's it. So it's either price pulls back to this zone or price breaks out from this zone. If price breaks out from this zone, you might not want to wait for price to pull back to this level anymore. But if price goes up, let's say the market has opened, price pulls back up to this level, you sell. Okay, so you either sell from this level or you sell from this below this support zone. I hope that is clear. So that's my take on GJ. That's my take on GJ. Which other pair? EJ and GJ, I think they are positively correlated. So if you're looking for sell setup opportunity on GJ, you should expect a bearish move also on what's it called? Euro JPY. You can see what we have on Euro JPY. Please, who is drawing on the chart, please? So you can see what we have on GJ. You can see the candlestick formation here. The confirmation that the pairs are in the market, and you can see, I think they tested this resistance. I could even get to that level. I think they tested this resistance. Yeah, the resistance here. So you can see this is key level. Resistance, 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 resistance. If this level is broken, then it's possible price will hit this resistance. I'm not sure it's going to happen. I'm not sure. Okay, so I'm looking for sell setup. What we have here is a sell. Is a sell. Okay, but you might want to wait for price to pull back to a resistance level before you consider selling. Let's go to 1 hour. Okay, so we have this is a resistance. You might want to wait for price to pull back to this resistance level before you consider selling. Okay, so let's apply Fibonacci from this swing high to this swing low. Its price at premium or discounts is at okay, it closed above 61.8. No, below 61.8. So it's at premium. It's at premium. One can risk selling, but if you are selling from the current market price, you can see that the market has opened, right? And there was a gap. You can see this was where the market closed. It opened at this price. This is what we call gap in the market. Okay. Normally, the market or the new candle is supposed to open at the closing price of the previous candle. Okay. Normally, the next candle is supposed to open. The opening price of the next candle is supposed to be the closing price of the previous candle. So you can see there was a gap. So that gap must be filled. Most times, that gap must be filled. So you can see that has happened. You can see it's opened at this price. This gap has been filled. Anything that makes price push to this resistance and there's a bearish reversal candlestick formation at this level, it's time to take a sell. It's time to take a sell. And if you are selling from this level, for example, your stop loss, this is where you set your stop loss, or you set it 10 pips above this level. So your risk on this trade should be around 30 pips. And there's a possibility for price to get to this level. So you are just risking 40 or 30 pips for almost 120 pips profit. That is a good risk reward. You are risking, like you're risking $1 to make $4. That is a very good risk reward. Those are the things you should consider. What is the risk and what is the potential profit you can make on that trade? Once the risk reward makes sense, execute the trade, set your stop loss, and set your take profit. Losses are inevitable. You must be willing to take losses in this market. If you're not comfortable with losses, I'm sorry, you cannot be a successful trader. You should learn to be a good loser. Okay? Learn to be a good loser. A good loser is someone who is able to define his risk and define his potential profits on that trade before executing the trade. 90% of traders most times execute their trade based on emotions. That's why they keep losing money. That's why they keep losing money. Okay? So that's it on Euro JPY. These guys are too much. So let's go to, let's see the monthly and the weekly. So this is the monthly. So you can see last month's candle closed as what? A spinning top. This tells us that the buyers are becoming weaker. But you can see the body of last month's spinning top is bullish. So before we sell, if this month's candle closes bearish, then we should expect more bearish move on Euro JPY. If this monthly candle, but you don't want to wait for the monthly candle to close before you execute a trade. That's why you have to go down to lower time frames, okay, to confirm if you have a good bearish setup on those time frames, lower time frames. So you can see a lot of weak candles here, indicating that the buyers are becoming weaker. You can see we have it here, and here we had a support. If this support is broken, it means that the sellers have overpowered. You can see it was a resistance here. That is the reason for this support, this resistance. We've been trying to push price below this support. You can see. So if they're able to push it below this support, that tells you that the sellers have overpowered the bulls. That's when you consider selling. You cannot sell at the moment. You cannot sell at the moment. Okay, since price is in the range, for now you can see this is the high of the range and this is the low of the range. If this high, okay, if the candle is above this high, there's a high probability that price will keep going up. It could also be that they want to hunt for the stop losses at this level, so that the candle close above this level is not guaranteed that price will keep going up. Just be they just want to hunt for stop. You have a lot of stop losses at this level. You also have stop losses at this level. So they might want to clear those stop losses, okay, at those levels before price starts dropping. Okay, so don't just jump in and buy. You can see that Euro JPY has been bullish for several months, if not years. You can see since 2022. Okay, we're in 2023, 2022. You can see it has been bullish. So if you didn't buy at this point, you didn't buy at this point, why would you want to buy at this point? If you are buying at this price, you are buying at premium. It's very risky, very risky. So you should look for sell setup. If at all you're even considering buying, you should wait for price to pull back to maybe a support, maybe to this support. That's when you consider sell or buying. Probably to this support, you should wait for price to pull back to this support. You don't want to buy at that at the current market price. The risk will be too much. Price should pull back to these levels before you consider buying. Personally, I cannot buy Euro JPY. It's at this current market price. It does not make sense. That's not a good investment. That's not a good investment. You could be trapped if you buy. You could be trapped. Okay, let's look at gold. So that will be the last instrument we'll be looking at tonight. Okay, so we don't have to analyze all the pairs, right? It's not necessary because most of these pairs are either positively correlated or negatively correlated. So the same way we analyze these pairs, you can also do that on other pairs. Okay, good. So if GBP USD is bullish, gold also should be bullish. They are positively correlated. They are positively correlated. Okay. I had a session with beginners yesterday. That's why you can see I have indicators, the moving average and stochastic. Okay. So as you can see, this is 4-hour time frame. Let's start with the weekly time frame. Okay. Last week candle was strongly bearish. Let's see. It was strongly bearish. Okay. So based on the weekly candle formation, the pairs are still in control. Okay, the pairs are still in control. But let's go down to let's see monthly. Okay, you can see monthly also looks bearish. There was a break from, we had a support here. You can see this is a breakout from a support. This level has become resistance. And when there's a breakout from support, it's expected that price pulls back to that support which has become the resistance. That's a break. They call it break and retest. So price is expected to pull back. So that's my expectation for this week. I want to see price pull back to this resistance. Okay. So we had equal lows here. Okay. So I want to see price pull back to this resistance before I'll consider selling. Okay. So this week, my bias on gold is bullish. It's bullish. Okay. So let's go down to daily. You could also apply your Fibonacci on, okay, let me use the daily. Or you could even do it on the, okay, let me use the daily. So 1, 2, 3, 4, 5. 5 candles on a daily time frame makes up 1 week candle, right? So you might just first apply the Fibonacci. 1, 2, 3, 4, 5. So this was the high of the week, and this was the low. So that's the range for last week, right? High, low. Question: where is price at now? Price is at discount, right? Price is at what? Discount level. So you want to buy from discount and sell from premium. Anything above 50 is premium. So it will not be wise for you to sell at discount, right? It will not be wise for you to sell at discount. This is what you should be doing on a daily basis and also on a weekly basis. The daily candle closes, get the range, apply your Fibonacci to know if price is at premium or discount. If your bias for that day is bullish and price closed at premium, if price closed at premium, you want price to pull back to discount before you consider buying. And if your bias is bearish and the market closed at discount, you want price to pull back to premium before you consider selling. I hope you are getting me. So price is at what? A discount. So we should be looking for buy. We should be looking for buy. We should see price pull back to a premium level. Why would you want to sell at this current market price? When gold, let's assume at this point, it was sold for 100 naira. Now it is selling for 1,000. Why would you want to buy at this price? I hope you are following. So you should have entered sell from this point and not from this point. If you enter sell at this point, where would you set your stop loss? This is where you are supposed to set your stop loss. So consider the risk on that trade. But if price pulls back to, let's say, above 61.8, instead of risking close to 200 or 300 pips, your risk will reduce to maybe 50 or 60 pips. And your target will be around 150, 180 pips, which is a good risk reward. But if you are selling from this point and you are risking almost 200 or 300 pips, and you are aiming for, you want to go for risk reward 1 to 2, that's like 300 to 600. How many weeks or months will it take for market to give you 600 pips? Do you have that patience? You don't have that patience, okay? You are a day trader. So, and probably you don't have much capital to hold drawdown of 200 pips or 300 pips. You don't have that much capital. So wait for price. So my bias for gold is buy. So I want price to pull back to a premium before I'll consider selling. I can't sell at this current market price. So let's go down to 4 hours. So on 4 hours, you see what we had. Now, if you look, let's go to weekly. I don't use indicators, but let me just, okay, you can see at this point, the stochastic is below level 20. And anytime the stochastic line crosses level 20, it tells you that the market is, or that asset is oversold. It is oversold. It means that the price is cheap. And when price is cheap, demand will increase. Price is expected to go up. Okay, so you can see that on weekly, we had Gabe. So you can see we had okay, the what's it called, stochastic below level 20. If you go to the chart, maybe the stochastic plus level 20. If you look at the chart, You can see that price went up. You can see it went up before it came down. It went up. Okay, so let's go down to daily and see where stochastic is. I will attend to your questions in a few minutes. Okay, so you can see daily. You can see that the indicator is at oversold. You can see oversold level. Can you see that on daily? Now, before you jump in, you don't just jump in because you have the stochastic line below level 20. You don't just jump in. What you're seeing on the chart must align, or let me say the indicator must align with what you have on the chart. So you must have a bullish reversal pattern on the chart before you consider buying. So you can see on the daily, though the stochastic line is below level 20, the candle on daily is still strongly bearish. So you cannot jump in and buy. It is when the next candle closes bullish, that is when you will consider buying. It is that bullish candle that confirms that buyers are in the market. Right now, it has not been confirmed that we have a lot of buyers in the market. It has not been confirmed that the demand for gold has increased. So don't jump in and buy. So you can see that this and this does not align. They call that on divergence, right? Divergence. Okay, so let's go to 4 hour. So you can see on 4 hour also, the stochastic indicator, it has been below level 20 for some time. You can see it has been below level 20 for some time. And it's also currently at below level 20. So why am I considering buying? Stochastic is below level 20 and I have what looks like a spinning bottom. That's why I'm considering buying. I have a spinning bottom, but this spinning bottom even is not even a confirmed, a valid spinning bottom because the body is bearish. If the body was bullish, I could have just executed a buy trade. Okay, but because the body is bearish, I would have to wait for the next candle to close bullish to confirm that we have buyers in the market. I hope you are following. For those of you who want to be using indicator, you first of all look at what the candle is saying. The candlestick is everything. If the candlestick says buy and your indicator is saying buy, that's when you will enter. But when your indicator says buy and candlestick says it's not time to buy, you don't jump in and buy. Candlestick first before any indicator, before any tool, before you use any tool, you want to look at the candlestick. What is the candlestick saying? That is what you follow. That's what you follow. So we have a spinning bottom. So we're supposed to wait for the next 4 hour candle to close bullish before we buy. We should wait for the next. But let's see what we have on 1 hour. What's happening on 1 hour? Okay, good. On 1 hour, we have stochastic below level 20, and we already have a confirmation to buy here, right? We had an hammer. The next candle closed as inverted hammer. Then the next candlestick closed as spinning bottom, and it's a bullish spinning bottom. So this confirms that buyers are showing up in the market. But you just patiently wait for price to break the high of this hammer. The 4 hour candle or 1 hour candle closes above the high of this hammer. That tells us that there are buyers in the market. So we could consider buying gold. So my bias on gold is what? Bullish. Just waiting for a 4 hour candle or 1 hour candle to close above this resistance for me to buy. So that will be all for tonight's session. Let me attend to your questions. Someone asked, how do I calculate my stop loss? How do you calculate your risk? Your entry price from your stop loss price is your risk. Your entry price from your stop loss price is the risk. So for example, if I'm buying above this level, let's assume this is my entry price, 1851.1. My stop loss. Why did I execute this trade? Because we had hammer candlestick formation. That is the reason, right, for executing the trade. So I should know that if a candle closes below this low of this hammer, which is the reason for executing the trade. If a candle closes below the low of this hammer, my bias has been invalidated. If this low is taken, so my stop loss should be at this low. This is the reason. If this candlestick is the reason for me to execute buy. So if a candlestick closes below this low, then I should be out of that trade. It will not make sense for me to hold on to my buy when a candle has closed below this level. It will not make any sense. So my stop loss will be at this level or few pips below this level. And I told you guys reasons why you should set your stop loss few pips below the low, because a lot of retail traders will set their stop loss at this level. They would have their stop loss at this level. So it's very easy for them to hunt for stop losses at this level. That's why I said set your stop loss few pips, 10, 15 pips below this level. That you are setting it 10, 15 pips below this level does not mean they won't get there. They might get there, but it's very easy for them to hunt for stop losses at this level because 90% to 95% of traders will set their stop loss at this level. Okay, so for example, if you executed a sell after the formation of this candle, this is the reason you sold gold, right? This is a shooting star. You should not be asking where to set your stop loss. Since this is the reason, this is your entry price, and you executed this trade because of this shooting star, then you should know that if this high is taken, if a candle closes above this high, you know that your trade or your bias has been invalidated. So you should be out of the trade at this level. So your stop loss should be at this level or a few pips above this level. Simple. If you executed buy because of this hammer, that is after the close of this bullish candle, then you wouldn't have, or yeah, you couldn't have executed a buy, right? Because of this hammer. This is a bearish hammer. Spinning top, bearish, bottom, bearish. This one also is bearish. So after this hammer, if the next candle closed bullish, we would have executed buy. But the next candle still closed bearish. The next one that followed closed bearish. So we can't buy. We would have waited for this bullish candle. This is the candle that confirmed that buyers are in the market. And if you look at the stochastic indicator, immediately this candlestick formed, this hammer, what happened? The stochastic indicator was below level 20, which indicates that that asset is oversold. So we want to buy. But before we buy, the candle, there must be a bullish candle. So this is where we would execute buy. Most people will just say, because stochastic is below 20, they will just jump in and start buying. That is not how to trade. You cannot be buying when you are seeing a bearish candle. You cannot be buying. There has to be a bullish candle. Now, for example, if I want to sell, or let's say I want to buy after the formation of this hammer, I don't want to wait for this next candlestick to close. What would I do? Let's assume there is no 1 hour time frame. All I need to do is just go to, let's say it's 15 minutes. That's the next lower time frame. If I go to 15 minutes and after the close of this 1 hour hammer, there is a bullish candlestick on 15 minutes. I can just enter buy, and I would ensure that the stochastic also is below level 20. So let's go to 15 minutes and see what we have on 15 minutes after the close of that. So you can see on 15 minutes, see what we had on 15 minutes after the close of that 1 hour. So we already had a confirmation that we have buyers in the market. Okay, and the stochastic is also below level 20. So I could jump in and start buying, right? I don't have to wait for that next 4 hour candle to close bullish. But at the same time, if I had entered after the close of that 4 hour, I'll be taking the same risk with those who waited for that 4 hour candle to close. But if I'm not patient, if I don't want to wait, came down to 15 minutes and I have a bullish setup here, I will execute the buy trade. My stop loss will be at this level because this is the reason. This is an hammer, and this is the reason I'm executing the trade. So my stop loss should be at this level. Anything that makes a candle close below this low of this candle, I should be out of the trade. I hope that is clear. I hope that is clear, Mr. Who was that question? Mr. Julius. I hope that is clear. What time does Asian, London, and New York session? Asian session starts by 10 p.m. London starts by, I think, 7 a.m. Okay? Then New York starts by 2 p.m. 2 to 30. That's when New York starts. The Asia market is open now. You can see the candle for the day has opened. Okay, so Asian market has started. To run from now to maybe 7 a.m. Then by 7, London session comes in. Then by 2 p.m., New York session opens. I hope that is clear. So that will be all for tonight's session. Okay. I appreciate you all for USD JPY. If Euro JPY is bearish, GBP JPY is bearish, you should expect USD JPY to be bearish because the JPY is the counter, is the quote on all those pairs. Okay, is the quote on all those pairs. So you should expect bearish move on those pairs too. What time frame is best for the fair value gap formation? If you're a day trader, you should look out for fair value gap on 1 hour time frame. If you're a day trader, look for fair value gap on 1 hour or 15 minutes time frame. Okay? I hope that is clear. Please, I can't take Euro GBP. I think I have to go off now, please. Okay, let me just look at Euro GBP. Let's look at Euro GBP. If you are newbie, I've always advised that you should focus on major currency pairs, 7 major currency pairs. If you are a newbie, focus on the 7 major currency pairs. Those are the pairs I trade. All these cross currency or exotic pairs, I don't give much attention to them. Okay, it's only when I don't have good setup on my major pairs I consider trading those exotic or cross currency pairs. Focus on the major. They are the most volatile pair. Most of these crosses and what's it called? Crosses and exotic pairs, they range a lot. That's why I don't trade them. Euro GBP. Seven major currency pairs. Euro USD, GBP USD, USD CAD, USD JPY, USD CHF, New Zealand USD, Australian dollar USD. Those are the 7 major currency pairs. I think they are the first on the market watch. The first 6 pairs, right? 1, 2, 3, 4, 5, 6. Then New Zealand USD is the 7th. That is New Zealand USD. So the first 6 pairs on the market watch window are major currency pairs. Then you have the New Zealand USD, which means it's 7. Okay, so let's see what we have on the monthly. So from what we have on the monthly, this is a fully set up. Okay, this is a fully set up. But let's go down to daily. We should look out for sell because I think price just pulled back into a fair value gap on the monthly time frame. You can see this is a bearish setup. This gap has been filled. This fair value gap, it has been filled. It has been filled. You can see. So it's time to sell. It's a bearish setup for me. Let's go down to weekly. You can see weekly. This is an angry man, right? This is an angry man. That's an angry man. Okay. An angry man indicates change in trend from bullish to bearish. You want to also consider what's price action from this point to this point. Price was in a range, and what happened? There was a breakout. You know why this candlestick closed above this level? You know why? Because of the stop losses at this level. That's why they push price up to this level. But to a retail trader, they will see this as a valid breakout, and they will jump in and start buying. They will get trapped. They will see this as a valid breakout. If you understand that there are stop losses at this level that need to be cleared, stop losses at this level that need to be cleared. That's the reason for this breakout from this range. So it's not every time a candle closes above a range, you just jump in and start buying. Go back and see if that level was a resistance. Okay, was a resistance, or you have stop losses or buy stop orders at that level. you should know that that was just, should I call it manipulation or stop loss hunts, okay? So you can see after they hunted for the stop losses at this level, what happened? They push price back into that range. Let's go to daily. So you can see we had a support here on daily. This candlestick broke out from that support. So for me, this is a sell setup. This is a sell setup. I'm going to take any trade on Euro GBP to be a sell. This was last Friday candle. Looks like a shooting star. So if you are considering selling, wait for breakout from this support. Wait for breakout from this support. Okay, so as you can see, if you apply Fibonacci 2, where is price now? Is it premium or discount? Let's take it from this point to this point. Is price at premium or discount? Is at premium. So at premium, what would you do? You sell. If you want to buy, you should wait for price to pull back to discount, which is below level 50. That is when you would consider buying. So below level 50, you could just identify a fair value gap below level 50. Okay, I just identify a fair value gap. So there's a probability that that gap will be filled. Then when price gets to that zone, to that fair value gap, and you have a bullish reversal candlestick formation, you now buy. This thing is simple. Just get the range of the market. Okay, so you identify your premium and your discount zone. So if your bias for the day is bullish, okay, if your bias for the day is bullish, you want to see price push down to a discount level before you buy. But if price is at premium, you can't buy. Okay, and if your bias is bearish and price is at discount, you don't want to buy, or sorry, you don't want to sell at discount. You want to see price push up to a premium level before you sell. I hope that is clear. I hope that is clear. So at the close of the daily candle, maybe the daily candle closes, just pick your Fibonacci 2, get the range of that day, the high and the low. Okay, identify your premium, identify your discount. Do you want to buy? Price should be at discount for you to buy. Okay, price should be at discount, and not just having price at discount. You should have a bullish reversal candlestick at that discount level. That is when you buy. I hope that is clear. And if you are considering selling and price is at this discount, you want to wait for price to go to premium before you consider selling. Thank you very much for your participation in tonight's session. It's likely I will come on, I'll be on tomorrow morning, okay? I'll come on live tomorrow morning in between 6, 7 a.m. or 8 a.m., okay? If I don't come online, if I see a setup, I'll definitely send it to the group. I'll send it to the group, okay? Because sometimes I don't think the live session is even necessary, because most times you'll just be online and there is no setup. You'll just be wasting data and time. That's why it's best to just send a video to the group. Okay. Thank you very much for your time. Do have a wonderful night. I wish you all a profitable trading week. I wish you all a profitable trading month. Please don't be greedy. Don't over leverage. Come to my inbox and tell me you've lost money. I'll just laugh at you. Okay? I'll just laugh at you. Most people will come to my inbox and cry that they've lost money. At the end of the day, you find out that they are over leveraging. They are taking too much risk. They are over trading. They are over trading. So please stick to your trading plan. I've always advised, don't risk more than 2% of your capital every day. Don't risk more than 2% of your capital. Now, if you have less than $100, it's possible you'll be risking as high as 3 to 4% or 3 to 5% of your account. But if you have $1,500 above, you shouldn't risk above 2% of your capital. If you are risking 1%, 2% of your capital, you won't panic when you have an open trade. You won't panic. The reason you are panicking is because you over leveraging. Okay, so please, forex trading is not difficult. It's not difficult. So don't make it difficult for yourself. Okay, keep it simple. Your strategy should be simple. Resistance and support, candlestick patterns. That's all you need to make money in this business. It doesn't have to be complicated. Okay. Thank you very much. Do have a wonderful night. If you have any question, forward to me on WhatsApp.